Hi everyone, this is Malika, the author of How the Best Invest, Make Confident Decisions Like the Investing Superstars. And today I wanted to talk to you about Tesla. If Elon Musk keels over, what happens to Tesla stock? The numbers I discussed today are based on today's date of August 21st, 2020. And I think with Tesla, there's a huge key man risk because he has this cult of personality around him. When I worked in fund management, we would produce these investment memorandums for investors before they invested billions of dollars into a certain project. And one of the important sections was called key man risk. We should have called it key person risk, where it put down the one, maybe five names at most, where those people, if they died or if they left the company, this investment was could get into deep trouble. And in terms of Tesla, I think Elon Musk is very much a key man. Tesla stock has doubled to $2,000. It's doubled from a year ago. They booked a lot of earnings from regulatory credits. They're a green company, so the government gives them these regulatory credits that they then sell to more polluting companies. They have a huge amount of debt. To give you some perspective, according to the International Energy Authority, electric cars in 2019 were about 2.6% of car sales. Overall, globally, electric cars are just 1% of cars. Tesla's price to earnings, or PE ratio, is sitting at 1,000, just over 1,000 right now. To give you some perspective, BMW, a comparative company, their price to earnings is 11.4. Apple's price to earnings is 35. So the price, which is the share price, to the earnings, the amount of earnings that's supporting that price, tells you how overvalued or undervalued a company is. And Amazon, which a lot of long-term investors consider overvalued, is also is sitting at 126 as its PE ratio. And just to remind you, Tesla is sitting at over 1,000. To justify its current price, Tesla would have to compound annually in the mid-30s, so like 32, 33, 34% for the next 11 years to justify this share price. So how do you think about it? I think you have the key man risk, cult of personality. Elon Musk is a showman. What he did in 2018 when they had terrible earnings. On the one day I was at an investor conference and these earnings came out, and the people I was with were interested in them. And the very next day he sends up a rocket, SpaceX, with a Tesla Roadster attached to it. And we were looking at the news, the normal news, and the fiasco did not appear in the news because it's just been overshadowed by this space rocket thing. So he's an expert at that. Tesla cars are beautiful. When the first showroom opened up in Menlo Park in California, where I lived for a very long time, I was driving from Palo Alto into Menlo Park, and I turned to the right and saw the showroom and the car for the first time, and I was like, wow, it's a gorgeous showroom and a gorgeous car. And I'm not a car person, so they really appeal there. The man himself is very unconventional and appeal. He's taken on the Chinese government. He would refuse to shut his factory when California asked him to do so because of the coronavirus. So the way to think about this, I think, is to take one of the principles of 10 Timeless Investing Principles. This bookmark, I'm happy to send you that. The first principle is investor or trader. Decide if you're an investor or trader. Investors invest for the long term. Traders speculate for the short term. It's all right to pick either strategy, just not for the same investment. So if you're a trader, then yeah, sure, keep up with Tesla, see them go up and down. If you're a long-term investor, then maybe you just wait until BMW buys their technology for cents on the dollar. Thanks very much.